Hi everyone, my name is Rashid. Today is the 19th of June 2023 and I'll be making my weekly prediction for SPY. As usual, we'll go over the monthly, weekly, and finally the daily charts, and then I'll give my final prediction for SPY. But before getting into the video, it's important to make the disclaimer that all information presented in this video is completely for educational purposes, and taking trades based purely off of this information is highly unadvised since markets are subject to risk and you can avoid unnecessary losses simply by consulting a financial advisor before taking any positions in the market, since it requires a lot more knowledge than provided in this video to take an effective position that can result in profit. Now that we've gone over the disclaimer, let's get into the video. So, as usual, let's start with the monthly charts and recap what's happening so far. Obviously, we can't predict on the month of June, but we can clearly see that as for the moment, it is a very, very strong green candle. But we'll cover that after we go through the previous few candles. Here, in the month of March, we had a strong hammer candle. Then the next month, we had another green candle, however, not as large-bodied and not as strong in its momentum. However, still a green candle. Here we had a doji candle for the month of May. However, since the breakout of the resistance of 418.18, the market has since flown upwards, and we'll see more clearly in the weekly and daily charts. The RSI is also going upwards, which is confirming this movement that we're seeing so far, and the RSI average has just now started to tilt upwards as it went from 50.78 to 51.11, and it's just started to change its direction. So we have a strong bullish signal from the monthly charts for a monthly outlook if you want to go with that route. Next, we can look at the weekly charts. And you can see this very, very clear trend line that I've drawn here, and it will make a little bit more sense when I go over the daily charts. But the gist of it is it's the lows of all the previous 4 weeks aligned to form a trend line that is connecting the lows, and we can see it's clearly in an upwards direction. Now, let's recap what we can see from the weekly charts. Then we had this strong dragonfly doji, then a hammer candle, which led to a spinning top candle last week, this week, the week before. And then last week, we had a very, very strong large-bodied candle. However, not a hammer, just a large-bodied green candle, which we can see was met with a strong resistance at its high at 443.90. And the RSI has gone steadily upwards, confirming this movement, and so is the average. And the RSI is above its average, which is obviously a bullish signal for the market. So, that's what we can see from the weekly charts. But this will all make sense when we get a little bit closer in the daily charts. So this is the trend line that we were referring to, which is the connection of 3 lows that has been extended to form this trend line of the lows. And it's clearly upwards. Now we can see that the market has gone upwards for the past few weeks, and it got all the way to the high of this candle at 443.90. However, we can clearly see this is a strong resistance point as the next candle was red, and when the market did try to breach it, there was again a resistance and the market was flung downwards, so we had the week ending on a red candle. Due to this, we cannot simply give an upwards direction. Another thing to notice is that the market is trailing the top of the Bollinger Band, which almost always means a mean reversion. Although that hasn't happened yet, this might happen in this week. So we have to take that into consideration as well. The RSI went over the overbought zone, has now started to reverse back down due to this candle. And we can also see that this candle here with the high, it's not an engulfing candle. However, it is very, very large bodied and does cover the high of the candle. However, the body of the next candle does go a bit over the close of this candle. So it's not an engulfing candle, but we can use it as a support and resistance for the price action, which we'll cover now. So, the daily charts clearly show us that there is a possible downwards reversal, even though the weekly and monthly charts clearly show a bullish continuation. So for this, we have to be a little bit wary because the RSI has just started to come back down, so that can result in a bearish downward movement. And the price action is very, very close to the Bollinger Band, which can also cause a mean reversion. So we have 2 signals that we have to take into consideration. So from this, we can clearly see that we have to have a clear support and resistance to break before taking a directional view. And the easiest option to go is the high and low of this candle. We can see that the high that we're looking at is 443.90, which acts as our resistance, and then the market does close over it, we can go with a bullish view. And likewise, if it closes below 436.23, we can take a bearish view for the market. Now that we've covered the technical analysis aspect of this video, we can now head over to the Excel, which shows a little bit more detailed written version of the prediction for the week and a review of last week's prediction. So for this week, we have no trade yet. We wait for the specified candles breakout. We buy when it crosses the high at 443.90 and sell when it falls below the low at 433.59 with a target of 1% and trailing stop loss or 0.5% on the last day as a target. If the target or stop loss is not hit, then we take the closing price on Friday, assuming a trade has been taken. The max OI from the monthly expiry is 420 for CE at 91,741 and 420 for PE, which is 184,303, and the PE is up. It means there is more put selling at a higher value, which obviously has very good implications for the market. However, we'll cover this a little bit later in the video. Monthly PCR is 2.88. The max OI for the weekly expiry is 440 for CE at 13,757 and 430 for PE at 64,931, and the weekly PCR is 5.22. Now this is absurdly high, showing that people are selling puts significantly more than calls, which indicates that the market is expected to go upwards by buyers. So this is also one thing we can take into consideration that increases the likelihood of the market breaking out upwards rather than downwards. Although we did see a candle which was red at the end, so we're approaching this with a little bit of caution. The likelihood that the market continues to go upward is very high, since the technical analysis clearly shows a bullish continuation for the weekly and monthly charts, which we also have to take into consideration. And aside from one or two indications, almost every other indicator is bullish for the market. So because of this, we can obviously have a little bit higher expectancy of the market closing upwards. And the price action is an upward channel, which is shown in the video. The weekly and monthly trend is up, although that is an error and it should stay up. For the monthly trend, for last week, there was a trade that was triggered. That was a buy on the 13th of June. The entry price is 435.32, which is the open, and the total quantity that we bought was 232. The exit price is 439.67, which was the 1% target that we needed to meet, and we made a total profit of $1,009.2, and our closing balance is $102,229. So we've already made around 2% in a month, coming back from the losses that we had before because of the volatile market, and now that the market's a little bit more stable, we're obviously making more and more incremental profits. So this summarizes our video for this week, and if there are any changes that are required, I will make a video on that. However, as for the moment, this is my prediction for SPY for the week ending the 23rd of June 2023, and I'll see you next week for the new prediction.